Welcome to the Trade War Chest, 30 days profitable trading. I'm glad you're here. Today, we're going to talk about one of the most important parts of your trading journey, right? That's going to be the tools that you need to get traded in the market, right? Just like a soldier, right? Prepare for battle, right? You know, like they're going through it all over there, right? A trader, you need the right weapons, so you need the right tools that help you read the market, right? Manage your risk and make always confident decisions, right? You want to make sure you're confident in the positions that you're taking in the market, right? So in this session, I'm gonna show you some of the essential tools that every trader, in my opinion, should know, right? What they are, how they work, right, and how to use them to your advantage, right? So let's unlock some of your war chest trading tools, right? And this is something that I had actually put together to do last week, right? And I just had some issues with them in Florida, so we're going into hurricane season. So it doesn't happen. It happened a couple of days ago where we get these storms and we have power outages, and when the power go out, the internet go out. So I actually was in the middle of doing this presentation or getting ready to do this presentation last week, and I sat here and went through this whole thing, man, and thought I was live and recording, and the power and internet went out. I was out here on the patio, with the green screen behind me, so that's why you can tell. But you're gonna see right in the beginning, everything went out, and I kept going, and I didn't even know what was going on. So basically, what we're gonna do is we're gonna go through this presentation, and I'm gonna pretty much I sat down and did made it into where like I could use it as a presentation. I ain't gonna waste the material I had already put together to do it. So we're gonna rock out like that, and we're gonna get y'all educated on some of these tools and stuff that y'all see me using on these charts, so that y'all can understand what's going on. Because if y'all don't understand what's going on, then you know how can you get in the market and be productive in any kind of way. So I had did this, and we're gonna go through it, but I've kind of like made it into a presentation. I got some notes for each, but it's not just like a slide. So we're gonna get into this, and I'm gonna start out by uh letting this play. I should play, but ain't nothing but like an intro, and we're gonna skip past that. I already gave an intro. If you ain't already, man, when you see this, subscribe to the channel, right? Like the video, right? Because every Sunday at 7 p.m. Eastern Standard Time, I'm gonna be doing this, right? This is my way of just giving back to the community by educating and giving you something that nobody can take away from you. This is a skill that if you get it and you hone it and you nurture it and you continue to work on it, this is a skill that could one day replace your 9 to 5 or whatever you do to get money, right? So we're gonna just get into the slides, and what is market structure, right? I'm gonna give you a brief definition, right, of what market structure is. Market structure. This is the foundation. It helps you understand how price is moving, right? Higher highs, right, or either lower lows, right? Are going to be your ranges, right? Use it to spot trends and reversals, right? And basically what they're talking about, if you can see my pointer, let me see. I don't know if I got a pointer on or not, but y'all can see that these candle patterns, they make what's called like a pattern, right? And this is going to create structure, right? And you see all of these ups and then these downs, and then you see those points to where that the market stops and then changes direction. That's going to be a reversal, right? So what this meant when it was saying higher highs is like it went down to this low position right here, and then it moved up and it set higher highs as in price, right? And then as it's coming down, right, it set lower lows, lower lows. Like it might come down and come back up, but then when it went lower again, it went lower than the last time that it went low, right? Higher high mean this time it went higher than the last time it went high, because we see all of these up and downs, but if you set higher highs than the last high, then you know that the market is moving in a particular direction, right? Trend line tool, right? How to use the trend line tool, right? Trending, right? Trending shows whether the market is going up, down, sideways, right? This tool right here helps you align your trade with the overall market direction, right? So as we see in the slide, the market is going down, right? So what I did, since the market is going down, I want to draw a line that connects bare minimum 3 locations on the chart, right? At higher highs, right? When the market went down, came back up and set a higher high, right? Went down, came back up and set a higher high, right? Down right here, came back up and set these high highs. And then you just want to connect this. And as the market moves with time, you're able to adjust this trend line, and you know what I'm saying? Y'all will see us get into that as we go into our forecast and analysis part at the end of this. But the trend line tool is what we use to basically just mark out and understand what direction the market is going in, right? So if the market is going down like we see, then generally we're gonna be looking to sell with the market. You don't, you know what I'm saying? You don't want to get into trading against the market trend until you get more advanced in trading. But as a beginner, you generally want to see, if you see the market going down, then only look for sell positions, right? Up, the opposite. Look for buy positions. All right, we're gonna go on how to use horizontal rays, right? And horizontal rays are gonna be those red horizontal lines that you see, right? What you do with these are you use this to mark key support and resistance levels, right? Simple, but very crucial for planning entries, exits, and stop losses, right? So generally, that's a general definition. Everybody finds their own ways to use these. I generally use them to mark my equilibrium zones, right? And last video we went over equilibrium. This is how I mark out real basic general equilibrium zones. If I get down into where it's crucial, then I really hone in on those equilibrium zones. But generally, we want to use these horizontal rays, and basically what a horizontal ray is you can, wherever the point you started, it will go on into the future forever, right? So it'll keep that mark there. You see, I started this one here, started that one there, started that one there, right? So that's what those are for, just the mark, support, resistance, entries, exits, stop losses, anything that you want to measure horizontally on the chart or mark horizontally on the chart, you use the horizontal rate tool. All right. Parallel channel, how to use a parallel channel. As you see, parallel channel consists of the 3 green marks that you see going in the downward direction, right? The solid one, then these dotted lines, and then this bottom one that's also solid, right? And what the parallel channel does is it draws a price channel in trending markets, right? Great for spotting breakouts and finding dynamic support and resistance levels, right? So basically, what this parallel channel tool can be used for, what I use it for, is to basically, to put it in very basic terms, to measure out all the possible uh, areas that the market can move in, right? And we see that we got a downward trend, right? So this is the highest of the high, right? And then as the market has gone down, right, we got the lowest of the low, right? So now this is a zone, right? And so now what we're gonna do is we're gonna look for every time the market comes to this top part of the parallel channel, it's gonna meet resistance and move back down. And if it breaks past this dotted line, it's gonna go down to look for support on this bottom solid line. You see that when the market came down to the dotted line, it found support, went back up, found the resistance. went sideways kind of, but downwards, came up, met the resistance on the line, got pushed down. It rode the line, on the sideways, down motion, and this is like a 4 hour chart, so now it's a 5 minute chart. So, it's a lot of movement in that, where you could have got some trades, but for general purposes, y'all can see how this tool can be used and how it can help you find interest, right? It comes up to the solid line, sell. When it comes down to the dotted line, buy, right? If it breaks past the dotted line, sell. When it comes down to here, you buy. It's very simple. That's how we use the parallel channel tool, right? So when you see me using these tools and these analysis and forecasts, play with them and learn how to use them and understand them. Or, at the bottom, y'all see it, 30-day challenge. That's the easy way out, right? We're going to move on to the next tool, right? The rectangle tool. How to use the rectangle tool. Okay. The rectangle tool marks consolidation zones, right? Helps you visualize areas where price is ranging before a breakout, right? And that kind of explains equilibrium zones. And on the same chart, you can see I had those red horizontal reds at about the same area. When I really want to hone in and do some real scalp trading or wait for a breakout like this, right? Or if I want to kind of work this zone right here, or work this zone right here, or this right here, then I use these boxes, right? These rectangle tools that measure out these zones and these areas that, can be powerful in helping you to identify reversals, um, continuations, breakouts in general, right? So it's a real powerful tool to work with and to understand, right? It's a tool that I use a lot. Circle tools, how to use the circle tools, right? Circle tools I generally use only for like teaching purposes. I haven't found a purpose to use it in trading, in my trading, you know what I'm saying? But the definition for it would be use this to highlight specific price action or zones of interest, like retest wicks or liquidity pools. Um, generally you see that's what I have uh, marked because I understand what they use for, but I generally this is a tool that I don't use a lot, but it can be used for these purposes. Um, and I try to, I'm going to introduce a lot of tools and I use them when I need them, but we generally want to try to keep our charts uncluttered. We don't want to clutter the chart all up and you get lost, right? We're gonna move on to the triangle tool, right? Perfect for drawing chart patterns like symmetrical, ascending, or descending triangles. These often signal breakouts, right? So you will see this tool being used to look for a breakout in either direction, right? Because we're marking out basically a flag, right? A bearish flag or a bullish flag, right? We got uh, uh, bullish flag, right? The market was moving up, right? But we got to break a support, right? Of structure. It was going up and then it broke past. And now we're looking for it to break out of this triangle for a reversal, right? For a continuation of this downtrend. This could be just a little retest at 23 or 38% on the tool that we're going to get to coming up, right? Next, which is one of my favorites. But this is a powerful tool. Once again, finding, breakout space generally, this is a good tool for breakout trading. This is one of my killers, right? Fibonacci retracement tool, right? And this is probably the tool that was the most important in me understanding and learning how to enter, right? When to enter and when to exit trades. That Fibonacci retracement tool, right? This is a tool that helps you measure pullbacks in a trend, right? Traders use it to find potential entry points and targets, right? And as you can see, I got it measuring this downward trend like we was just looking at. And one thing that you're gonna know is the 23% retracement is a scalper's dream, right? If you can understand how to use this tool and work 23, 38, 50% retracements, it's powerful for not only getting in on pullbacks early, but also just being a killer on being able to scout the market and understanding how to make money when others are taking their profit from trades, right? So we got people that are going to ride this trend down, right? And at some point when it meets the resistance where the buyers, right, take the momentum, there's going to be a period where those sellers start to take their profit. And then if the buyers overwhelm them, it'll continue up to the 38% level and up to the 50% level. And once they break 50%, then you pretty much got a reversal. You know what I'm saying? So that's what we use the Fibonacci tool for. Very, 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 very powerful trade tool, especially for beginning traders, right? Especially, I'm telling y'all, this tool right here, when I understood how to use this tool within a week, I was profitable in trading. So, yeah, you know, it's a good tool for planning trades right here, right? Long position tool, right? And if y'all ain't familiar, long is the trading name for a buy, right? When you're buying the market, they say you're going long. I don't know why, but a long position is a buy, meaning that you see the market going up, right? And this buy position tool, a long position tool, is a tool that you can use to plan your trades, right? You got an entry point, which is right where the red and the green meet, right? And then the red area measures the amount of risk that you're willing to take on this trade, right? So if I get in at this price, right, this price is the lowest I'm willing to, you know what I'm saying, go before I admit that I was wrong in the position that I took, right? And it's wise to use stop losses. When I first started the trade, I was with some kamikaze traders that didn't use stop losses, take profits, none of that. And I really don't think none of them still trading today. But that's a good tool for planning. Good traders plan their trades. Good traders know that the only real way to execute trading is to plan, right? To have a plan, to have a strategy, and then to stick to it and execute it, right, to the best of your abilities. But with this, you see, you can get your entry, your stop loss, and your take profit, right? Or the zone that you think the market is going to move. And those other tools lead up to us being able to make these type of predictions in the market, right? And the opposite of that, understandably, would be the short position tool, right? So in that same position, right, if you thought that the market was going to make this continuation down, right, you would use that Fibonacci tool, right, and you would say, okay, this was the 23%, right? That's where I'm going to enter. My stop loss is going to be at the 38%, right? And if they go past 38%, then that's where I'm going to admit that I'm wrong. But if I get in this trade, I'm looking for it to continue down to here where I'm going to take my profit or anywhere in between this area. But that's like an analysis of what I think the market is going to do, right? In the next time, right? And those pretty much are the tools that I use. I try not to use a lot of stuff on my chart to kind of have it all cluttered up on my patio too, man. This is my comfort spot. I got my boys in there. It's summertime. I got my little work area, but it's impossible to do this in quiet without an interruption, right? So y'all excuse that. I'm gonna be moving this and being back in my office, more regular. My office is about an hour and a half away. And it's just kind of hard for me to drive there every day and helping a girl with the boys right out of school. So that's why I'm kicking it out here. So when I get them quiet and all of that, and around 9 o'clock we kick them out, and that's when I go trade anyway. But those are the tools that I use, and that's pretty much how I am accurate in what we do in the market, right? So now, as y'all can see, I've moved into my live chart, right? And what I'm gonna do is I'm gonna be off screen, so I'm not gonna be able to see what's going on. But I'm gonna go into this and break down what's going on and give y'all my forecast and analysis for this week in gold trading, based on what we got, right? So right here we're gonna go to the daily, right? And as y'all can see, those tools that I showed y'all earlier, now y'all can see how I put them into effect. See my horizontal rays showing out these levels, right? And then my trade levels, right? And as y'all can see, they be holding up. The market is continuing to follow this trend line right here, this downtrend, right? Caught that little bullish trend right there that I kind of called last week. I said, okay, we went down, we caught the 28, 2900. We called out on that. We got the retracement, right? We got this resistance, but what we see is now I'm gonna start removing some of this stuff. Like I was telling y'all, we don't want to be cluttered up, right? So I'm gonna remove that. I'm gonna adjust this because we got something actual to work off of, right? But the first thing I'm gonna do is I'm gonna identify this, because this is an identifier, right? That's identifying that right there, right? So that just let us know that the market can push up and chase a new high. It's definitely in the realm, right? We saw that it met support right here on this trend, because we got this trend coming up. This green line is marking the bullish trend. Bullish meaning the market going up, bearish meaning the market going down. So we see that it's really kind of a sideways market, but we got a green cloud on the daily, right? We got it coming down to try to come through. We saw that market ended, selling, right? So I'm gonna go down in time to a 4-hour chart so we can look at this. Now, as we can see, July 4th, right? Go back to last week sometime, right? Whatever. So we're looking at the chart right here. And this is recent, right? Right up in here. Let's try to say something as long as you're on it. But ain't too much adjustments need to be made to our horizontal rays or our support and resistance that we got. It's looking like the market is going to continue on its way down. And what we got from that is that we got all these. We're going to open it up a little bit so we can look at the indicator. All right. We see the top of the Bollinger Band starting to open up a point that way. The bottom is already pointing down. The lagging line is pointing down. We got long wicks all up here. Major resistance right there at that price, right? 33.42. It met a hard resistance. I got a lot of sales off of that one price last week. So yeah, I think it's gonna come up and probably go sideways along this because it's Sunday and we're gonna get some push. You know what I'm saying from the Sydney and the Tokyo market because that's generally their nature. But I do think that we can look over here and start to see them possibly go green. You know, but I think we might get a push, but trust me, they're gonna manipulate this gold market down. They want to get it back around 3,000, maybe 3,150, somewhere in there. So I'm looking for sideways until we get some kind of manipulative news. Push it on down to around this 32.92 price again, and then once we break that, because you see it broke it and pushed back up, but got caught up. It didn't even come up to meet the resistance here. It made a new resistance to form this trend. We had this one, right? But it broke it. It came up, but it met a little resistance and came down. So that's why we just put that trend line there for that adjustment. And that's why you always want to come in and we got our charts, but you always want to come in and adjust them so that you'll be up to date to the changes. You don't want to be changing a chart trading using a chart that is not up to date with what happened in the market, in the near or distant past, right? Because in trading, right, we always want to look at the left side of the chart to try to figure out what's going to happen on the right side, right? I'm going to just save this so I don't lose my chart if anything happens. But yeah, I think we're probably going to get a little, and we can see it ain't even really pushing up, but around 9 o'clock, we'll really know what the market is going to want to do. It's probably going to push up and then drop down. But if we break this 32.92, 91 again, then I think the market is going to go down and definitely go up under 3,200. Definitely. 1 hour showing that we got a little bit of bearish activity, but I think it's going to push up and test this trend right here. Maybe go sideways a little bit until it run into this right here. These two coming together, that resistance might be what we need to be needed to push price on down with enough momentum to break that 32.92 level and take the market on down in price, which is what I think is going to happen. I just think it's going to go down, and if it break this trend right here, we go back to the 4 hour. If you break that green trend right there, this green trend line right here, then we can see the market gonna keep going down, and I got it coming down to somewhere around this area before it's gonna meet enough support to push price back up, and that's gonna be for some bad decisions or anything geopolitical or just messed up that's gonna cause it go down. Let's go to the 15 minute and let's see where I'm gonna start my night at tonight because I'm definitely about to get started for the week. Sundays I've been being real careful. This used to be my favorite night to trade and the favorite time to trade in the Sydney market coming into the Tokyo market, but it's just got to where that is too heavily manipulated, and I just don't play with it. If I do, I'm using very, very small lot sizes. I'm just gonna get me a couple of attempts in and get out of it. It's like I'm gonna take my shot, and if I hit, I hit. If I don't, I don't. I'm out. But it's just one of the markets that we can see on 15 minutes. So this thing really is going down since the market opened. You can see the dotted line. It's showing that the market is going down But I don't trust that one bit. It's only been like an hour. So we go down in time a little bit more to the 5 minute. That could be your whole orders before the market closed. Generally, this market, like I said, by 9 o'clock, it come in. And I think we're going to see the market push up to this red line, 33.42. It's going to meet that hard resistance. And it's going to continue to try to set lower lows, right? And I think we're going to wind up below 3,200 this week. That's what I think. I could be right, I could be wrong. But that's it, man. I hope y'all enjoyed it. I hope you take some notes, right? And I hope that you can use the tools that I showed you this evening, right? To get in here and map out this market same way I do, to grab my little pennies out of it every week, and live the way I want to live. Make sure you subscribe, like the video, share it, man. Anybody that you think this might fit, or might be somebody that could work with me. Oh, come on, man. Every Sunday, man, 7 p.m. Eastern Standard Time, I'm gonna share the knowledge that I have of the market, trading gold, for free, man. It's our way to give back on the channel. Kingpin Chronicles by way of Trade War Chest. I'm gone.